The industry has been wondering what would happen with Toshiba, and that question is now answered. Toshiba announced the successful completion of a $14 billion tender offer by private equity firms, Japan Industrial Partners, which leads a consortium that has acquired nearly 80% of Toshiba's shares. This brings Toshiba back under domestic control after years of strife with overseas activist investors. And the company plans to maintain Toshiba's CEO to restore morale and investor confidence. Tom, are we finally at the end of struggle for Toshiba?
I don't know that we're at the end of struggle, but we're definitely at the end of watching it unfold publicly in the space where you've got activist investors who are basically trying their hardest to make Toshiba look bad. And I mean, let's be fair. If you look back over at the history of what's been going on, they've taken it pretty hard. Like, they've well, way back in 2018, they were one of the leaders in the NAND storage market, and they had to kind of sell off some of those assets in order to raise money to deal with some of the accounting shortfalls and things that they were dealing with. You may know that company because it became Kyosha. They've been partnering with other companies along the way. They've had a partnership with Western Digital. You're kind of, when you think about it, they're the number three company in the hard drive manufacturing space. And you're like, oh, well, that's not bad. Well, the problem is there's only three companies left that make hard drives. And so, it's a lucrative business for them. But on top of everything else that's been going on, because these conglomerate companies are, what's the word I'm looking for here? We're kind of ripe for targeting by these activist investor firms, because what they want to do is they want to get rid of as many of these money losing assets inside of the company as they can to get a huge return. And that's not the Japanese way. And so I think that there's been this very tense struggle for a long time. And when you look into the headlines of the sale, like even the JIP group is basically saying, this was the best offer we could make. And Toshiba's like, we had to take it because it was the best offer on the table. And it wasn't, a complete success. They bought around just shy of 80% of the stock, which basically allows them to force out those activist investors. Probably not for what they wanted their return to be, but what it means is that the company gets brought back to Japan, where it's under Japanese control, and they can kind of do their way of managing things. They're going to obviously work through some of the challenges that Toshiba has had. They're going to focus on the things that are profitable, but they're not going to make hay about it in the news to try to drive the stock price. And I think that it's a cultural shift. And honestly, for the people at Toshiba, it's probably a welcome one, because they're kind of back home where they think that they're going to get the best opportunities. So I'm kind of curious to see not only how this impacts all of Toshiba's other product lines, but specifically when it comes to hard drives and NAND flash and some of the partnerships that they have, how that's going to help drive, maybe innovation in the storage market, or perhaps, depending on how it looks, consolidation or acquisition of other assets. Time will tell how that happens.